Hi again. This is Alexander Nikolov. This is the chart of S&P 500, and we had a top here on Tuesday last week, and then the index showed off a bit, up and down to the 21-day moving average. So the question now is this a new downtrend developing from the last week's top, or simply a pullback within an ongoing uptrend? So on the daily chart, what we see is a strong uptrend as the prices remain firmly above the rising 21-day, 100-day, and 200-day moving averages. So um, until proven otherwise, the trend is considered on the upside, and not only on the upside, but also it's considered a strong one. No sell indicators yet from the daily stochastics, but we got one from the daily RSI indicator. The pullback here from the last week's top looks corrective on the hourly chart, and it's still above the rising 200-hour moving average. So basically, nothing significant happened until this area here of 1185 holds this support. As long as it holds, we can assume that the trend remains higher, and higher prices are expected until the year end. Going to the Nasdaq chart, Nasdaq 100 chart, it has been stronger, but this week it pulled back a bit stronger too. But still, nothing serious here happened as well. Uh, Prices are currently near the rising 21-day moving average. So again, the trend is higher and is considered to be a strong one. Uh, Going to the hourly chart, you can see that here the major support area here is 2105, 21 area, where the 200-hour moving average is also located. So as long as it holds above this area, the trend is higher, and this decline from the last week's top is considered only to be a pullback. Uh, Having said all this, we remain bullish for the short term, but there are some signs of caution that suggest that the top that was recorded may be of greater importance. One such thing is the financials. Financials were lagging for most of the summer, and then in September, in October, they were lagging the market. But then finally, in early November, they broke out, and now this breakout has been almost negated with the last week's pullback. Notice how this HIXLF ETF, the financial sector ETF, closed below the breakout level. Of course, nothing serious happened here too, as long as the rising 21-day moving average holds. But if further selling pressure is seen early this week, and the market closes below 1480, then we can declare a false breakout here. Actually, it was a breakout, but it failed. So such a failure, if it can be confirmed, can lead to a much larger decline in financials. And of course, if the financials are under pressure, then they can drive the major market down with them. But on the other hand, semiconductors are holding nicely. Notice their breakout around 2870 area for the SMH semiconductor holders ETF. So during the last week's pullback, they held nicely, and even on Friday they finished almost unchanged, or even slightly positive. So basically, they remain in strong uptrend. So this is definitely sign of strength, and this sector is particularly very strong in the market. Also, gold stocks are faring quite well. Notice the key reversal pattern here on Tuesday, but then the prices held quite well above the support of 59 area, and the major support at 55, 54 area holds. and is well below the current price. So we can assume that gold stocks also remain in healthy uptrend until, of course, proven otherwise. And we can confirm a trend reversal here only with a break below the 55, 54 area. So these sectors that we have seen um, show a rather mixed picture, but mostly suggest that the broader market will remain supported in the near term. Uh, Going to the volatility index, the VIX, it remains in downtrend. Well, it advanced sharply on Friday, and it's now very, very near the declining trend line resistance here. So if the volatility continues to rise and closes above 22, 22 and a half, then a trend change can be confirmed, and that will be negative for the stock market. But as long as the downtrend in volatility remains intact, we remain slightly positive for the major market as well. And one final note of one ratio that we have been following in our video updates. This is the Standard & Poor's SPY ETF divided to TLT, which is the 20-year Treasury bond ETF. And you can see here that with the recent strong rise in equities in September, October, and early November, this ratio has established an uptrend, and that, of course, is a positive sign for the stock market, negative for the bond market. As long as it holds this uptrend, as long as it holds above 117, 115 area, actually the 115 level is the crucial area here. So as long as it holds above this level, we can consider this to be a positive sign for the stock market as well. So all in all, most of our indicators show an overbought condition that is now is being worked off on the stock market, but on the larger uptrend, at least for now, remains intact. Going back to the S&P 500 chart, the larger trend for now is considered to be intact, and until proven otherwise, until a close below 1180 area is seen in the S&P 500, we should consider the stock market in an uptrend. So that's all for today. I'll be talking to you later.